Welcome to the Rookie Blog for the week of August. I guess it'll be August 7th when you guys see this, August 8th. So last week we talked about the long call trade. We did get filled here. There was a mistake. I went less than or equal to when I should have gone greater than or equal to. So that's all about attention to detail. You can read about it in the write-up there. Basically, rookie traders, seasoned traders, we all make mistakes. We just got to keep using the tools and going over the orders the best we can to make sure that we don't make the errors that I did last week. So, but on this trade, it was a good trade so far. We've got filled. It really hasn't gone anywhere, but it's being supported a little bit by the 10 MA there. It did get popped in and then pulled back to the 10 MA the following day after we got pulled in. So as of now, there's no adjustment to the trade. So we'll leave that at that. What I did want to talk about was I was asked about what happens if you don't have a large enough account to be putting in an option that costs $16.50. So if we look at back here, and we look at our option chain. This is our option chain. So this was the option that we were going to get in, the 120. It was going to cost $16.50. So that's $1,650 per contract without margin. So the reality is that was a little bit for some people to handle. So the question is how do the smaller accounts deal with this? So if we just bought this option, just bought a call option, we'll look at the risk graph here and we'll see what we can do to make things better. Let me get to analyze trade and we'll look at a risk profile. So this is your typical call option. For any of you who haven't seen the risk profile, it's always good to get to know these. You can see it's kind of like a hockey stick for a left-hand shot there. Basically, as the call option goes, or as the stock price goes up, you make money, and you have a limited risk on the downside. Okay, but again, as you can see here, you're putting out $1,690 in risk. Okay, well, what if you've got a smaller account and that represents too much of an allocation to that? Then the way we got to do this is we got to change the trade. Okay. Now, what I don't want to see you doing, also in the write-up there, is what I call the Roach Motel. Some people will buy options instead of buying the 60 delta, which is what we recommend. Those are our rules. They'll go way out of the money and say maybe down to here somewhere. This set 170 here, and the reality is this thing's got to move almost $50 to get in the money. And the reality is what you do is you end up paying a very little amount of money down here, but you've also got around a 15% chance that you're going to win. Basically what that takes is a very large move, and it takes a very large explosion in volatility. Both things are unlikely. You can see here that the market makers, the plus minus is $28 here. That's the expected move over this 138-day period, so it's highly unlikely. So that's not really what we do to reduce our cost basis in a trade. We don't go way out of the money and just kind of hope and pray. What we do is we change the trade. All right, so let's look at it. So if we bought this, then we went and we sold something, out a little further out in the money. Let's go to the 140 here, which would be the 40 delta. So now we're going to sell that, and you can see that this changes the trade. It changes into a vertical debit spread. Okay, so now if we look at this on an analyzed chart, you can see that things have changed. We're going to get rid of this single first. And this is what the trade looks like. Okay, so it does limit our risk, limit our reward, but it also limits our risk, and it also cuts our risk in half, but still it gives us an availability of making a certain amount of money. Okay, so this is the way you'd play it. So now instead of looking at $1,600 bucks that you got to put out, now you're down to $900. Okay, so that's really one of the ways we do it. That's one of the ways. We'll explore more ways in the rookie blog as we go along. But right now, I just wanted to show you guys that one. So far, this is a good trade. We need to just hang on, keep our stop in. We're at our 30% there, our 1150. We've got some support here at the 10 MA. We'll watch this over the next little while. I honestly think it can get back up to this 140. We've got our target ready to go. This is how you trade the long call. You let it work. Okay, and we've got lots of time on our side because we went out the 142 days when we put this trade on. So let's let it work, and if we need to adjust it when we do the rookie blog next week, we'll take another look at it. All right. that's the rookie blog for this week. Happy trading, all.